Hello, everybody. I'm back. Your boy had to come back for a big vid today. Um, this is going to be a crazy week. Every week's crazy in this market, but this week especially, we have big news coming out, and we know from these past few weeks that a lot of the downside in the stock market has been caused by news headline catalysts. Of course, unemployment rate going down was a big catalyst for the market to go down because now the market wants to see bad news, so the Fed can be like, "Hey, what we're doing is working. Let's go easier on the market." The market stocks do not want to see good news. I know, it's crazy. We went from loving that unemployment was going down to hating that it's going down because it shows that the Fed, it's not working what they're trying to do. So we're going to get into that. But first things first, today we had a pretty choppy day on the S&P 500 and the Nasdaq. We gapped down even after yesterday's continuation to the downside. We gapped down. Honestly, these past 2 days have been kind of a chop fest. I mean, we went down about 0.5% yesterday, or 0.75% yesterday, 1% today. We've kind of just been having chop fest because I think the market is waiting for these big news headlines that are about to come out in the next couple days. But yeah, we get a choppy kind of day. We gap down, we go up, we fill the gap. We put in a new low on the S&P for the year. We put in a new low down here at 35.67, which we now have a kind of double bottom coming off of. So we put in a new low. We come up, we climb up, we hit 36.40, we bounce off of that. And what happens? What could possibly have caused this ridiculous couple red candles right here? I mean, if you look at this half-hour candle, it really shows you the picture. We dropped a full percent in a half hour towards the end of the session today. So the news that came out was this guy. This guy, for those who don't know, he is the Jerome Powell of the UK. He is the head of the Bank of England, their Federal Reserve. He came out and said, so gotta give some context to this. The UK bond market is a complete shit show right now, like an absolute shit show. Ours is bad, but UK, they're on the brink of collapse. They literally were going to collapse. Their pension funds were on the brink of collapse. All these pensions, everyone's retirement almost collapsed, went to zero. Not literally, but it was bad. So everything got so bad, it was caused by their chancellor coming out and say, hey, we're going to do tax cuts. We can't pay for the tax cuts. So when they can't pay for tax cuts, that means they have to borrow more money. That means they got to print more money. It's inflationary. It's not good. The bond market hates it. So that was such bad news that they turned around and didn't end up doing that. They said, all right, we're not going to do the tax cuts. We're sorry. And that was such bad news that the Bank of England had to step up and start pumping billions and billions and billions into the bond market because it was on the brink of collapse. There was no one buying these things. The pension funds entered it triggered a doom loop as pension funds were forced to sell their bonds to meet cash calls, pushing interest rates even higher and prices lower. So very bad. Almost a collapse. They had to step in. They literally had to pump billions of pounds into it, which they are still doing every day. They have been doing this since last week. But it's scary. This is a major economy, world economy, very huge world economy that is on the brink of collapse. And this guy came out today and he said, "All right, we're cutting it off. The well is drying on Friday." He literally said, "All right, all you guys got to figure out your shit. You gotta. What do you say? You have to balance your spreadsheets by Friday, basically, because we're not going to be buying anything." It's crazy. That they're just going to cut everything off on Friday. And people were saying, no, they got to keep doing this all the way through this month, if not longer than that. Like, things are so bad. The pound is just nosediving right now. Let's go British pound to US dollar. And you can see what this news did to the pound. I mean, it dropped at about 2% in this last little couple hours today. Just crazy. Just dumped off a cliff. So this is very bad news for many reasons, because obviously all these countries, this all affects the U.S. dollar. When the pound drops this hard, it affects the dollar. A very strong dollar is very bearish for stocks. You can see, let's see what happened to the dollar. Yep, right as that news came out, what happened to the dollar? It skyrocketed. It shot up about 1%, and that's super bearish for stocks. and the pound is going useless, basically. I mean, it's losing value like crazy, and now this is just very bad news. But then on the flip side, if they keep printing billions and millions and billions of pounds to prop up the bond market over time, that just keeps inflation going. It keeps the whole problem going, and their inflation's a lot worse than ours. So that's why they have to shut the hose off on the pumping machine. They gotta unplug it. They gotta flip the switch. Whatever you want to say. He said we've been up all night in recent days. We're gonna solve this problem. Like it's very bad. It's super bad. And we can get away with this. The U.S. has been getting away with this. We did it all through COVID. We printed $4 trillion, put it into the bond market to keep it afloat. Because if you look at let's jump to the U.S. 10-year back in March of 2020, you can see the pain. Look at that. I mean, it was falling off a cliff. It was just going down, down, down until this day when the Fed said, hey, we're going to start buying bonds at an unprecedented level, and then it shot up. So that was bad for us, but we get away with it because we are the top dog. The USD is the world trade. It's the currency of the world. It's the world the currency every country in the world trades with. It's the strongest one, so we can get away with that. But it's still not good because it devalues the underlying asset, the dollar. So we can get away with that, not forever, because obviously inflation, which we're dealing with now. But the UK cannot do it for nearly as long as we can because they have to borrow their money from somewhere. Even though they print it, they still have to borrow it from somewhere, and that usually ends up being from us. So this is not good when you see countries starting to default. Or starting to head towards collapse of their bond markets. These are the kind of panic events that cause flash crashes if something like that were to happen. And yeah, it's just not good. It's really not good for any country because if it can happen to the UK, it can happen to anyone besides us, basically. But yeah, it's bad for the currency. It makes the dollar stronger. Yada yada yada. So that's one thing. I could talk about that for 20 minutes. It's a nightmare. I mean, take my word for it. It's bad. The next thing, we got big inflation readings coming out. We have PPI numbers coming out, Producer Price Index, which isn't as huge as a CPI, even though the Fed does look at that one more. It's what it costs for production. It's not what it costs for consumption. So we have that coming out tomorrow. The projections on that core... Oh, here we go. Oh, no. So PPI is coming out tomorrow. Forecast to be 0.3%. Last month was negative 0.1%, so that was actually pretty positive. But they're projecting that to raise. So hopefully all these things are in projections or within their projections, and we don't get any surprises. Like last month, we got a surprise, and it tanked the market. So we have that coming out. We have FOMC minutes coming out, and that's basically just... it's a summary of their last meeting that they had in September. And this could be pretty big because this has happened multiple times this year where Powell comes out and he says, we're going to do this, this, and this. Then the minutes come out and it's completely different. So that's something to watch out for. I'm going to be pouring through that as soon as that's released. That doesn't come out until the close on tomorrow. So got to watch out for that. If there's any big changes, if there's any hint, if there is even a tiny little hint in any line of that saying, hey, we're thinking about pivoting at this point if this happens, then gotta watch out for that. This is a big that's huge if they say anything about pivoting. But if it comes out and they say, hey, we're gonna keep tightening, but we're probably gonna do 100 basis points at some point, then that would be very bad because the market does not expect that. It would be a surprise. So we're basically just looking to see if there's any surprises. And then Thursday is the big one, CPI read for the month of September. That core CPI, which is inflation minus food and energy, is expected to be at plus 0.5% month over month, which would be down from the plus 0.6% that it went up in the month of August. So that would be good if it came down very, very slightly, still nowhere near where it needs to come down, obviously. But if we get anything over 0.6 on that core CPI, that's super duper bad. So watch out for that. Core CPI year over year expected to be 6.5%, which is up from 6.3% core CPI year over year. So gotta watch out for that. And core CPI is basically like housing, that kind of stuff. Like very, everyone pays for these things. It's not like food. It's not like gas, because some people don't pay for gas. Some people don't pay for this or that. This is like housing. This is like broad inflation. So that's why core is kind of more important than the headline CPI. But headline CPI is expected to be 8.1%, which is down from the 8.3% that it was last month. So any surprises on those? Obviously, the market's going to crash. Any surprises to the downside, which means that inflation goes down, and that would be a huge bullish catalyst for the market. And right now, that's why it's a little worrying if you're in puts right now. I do have a put for the month of November on SPY, a pretty small one. It's not a lot of money, but or the month of November. Did I say month of November? But when you're looking at the market as it is right now, I mean, we're at lows. We're at damn near those lows, and we have made newer lows, but we have closed above the lows that we had over here. We're still far below the lows from back over here. I mean, we still have room to the downside on the daily thanks to this bounce. That's why the market gave us this bounce to get to cool down that RSI, which was getting that oversold. But you can notice the lower volume that we've had today. Take a look at the VIX. VIX is still very elevated. We're back up into this box right here. See this little red box? This is typically where the VIX gets sold out of. So we could see the VIX either break above this level, which it usually struggles to. As you can see back here, it always struggles to get out of this zone right here. And it usually rips up to it and sells off out of it, or it wicks up and then comes back down, wicks up, comes down, wicks up. It never stays around here above this $34 range on the VIX. So gotta watch out for that. We could just turn around and get a crazy bull rally from this point if we do get a bunch of good news. But then we got even in my opinion, a bigger one, maybe not in reality, but we have bank earnings. We have bank earnings coming out on basically 4 of the 5 biggest banks in the world. Morgan Stanley, Citigroup, JP Morgan, Wells Fargo. Why is this so huge? Well, when bank earnings come out, it tells us how strong the economy is in a way, because it tells us all about the debt market in America. They show us how much are Americans borrowing, how much are they saving, how much are they using their credit cards, how much are they taking out loans, car loans. It's basically just a really good scale of how bustling the economy is, or how active it is, how much people are spending money, how many people are taking out new loans. But you want to see good loans. You want to see people taking out loans in the form of credit card debt, that kind of stuff. How many people are getting mortgages, because these are huge mortgage lenders, and that I'm sure that data is going to be like astonishing. We're going to see mortgages falling off a cliff. So this is very, very huge, these earnings. And then United Health Group will show us how the healthcare one of the biggest names in healthcare will show us how the healthcare sector is doing. But Friday is huge. This is before market open, so this means Friday could be an absolute dump. I don't know why my headset died right there. It could be an absolute dump on Friday. It could be an absolute dump on Thursday. It could be an absolute dump tomorrow. Who knows? This market is crazy volatile. And you just have to you got to hold on tight, strap yourself in, because we are looking not good. And banks right now are absolutely hemorrhaging. I mean, JP Morgan is at its yearly lows right now. Wells Fargo is not nearly as down bad as JP Morgan, but look at Citigroup. Citigroup is at its absolute lows. I mean, banks are just bleeding right now. So that's another thing to keep in mind, is that right now these banks are near their yearly lows. So it would be very hard to imagine that when they're at their yearly lows, they're going to keep going down, but it's nowhere near being out of the question. It could absolutely happen. But then the fact that the entire market in general, like the S&P, I mean the Nasdaq, I got to show you guys the Nasdaq. The Nasdaq is just making new lows, left and, what is this? Get off my screen. Nasdaq, not that chart. Let's look at this one. Nasdaq's just making new lows every day. I mean, it made a new low yesterday, new low today. Tech is just hemorrhaging. Apple down pretty bad. Tesla, look at this. Tesla has had 1, 2, 3, 4, 5, 6, 7, 8, 9 red days in a row. So it's hard to imagine that these things just keep selling off at this rate, unless we get that panic event. We get a country default on debt, a bank goes bankrupt, Credit Suisse. That's still a thing. People aren't talking about Credit Suisse. They're still on the brink of bankruptcy, at least from what we think. They tell us, oh no, we're good, but that's every bank. Every bank that's ever gone bankrupt, they come out and they say, no, we're fine, everything's perfectly fine, and then next day, we were wrong, we're bankrupt. So gotta watch out for that. But you gotta look at Tesla. Tesla is down 9 days in a row, and I wish I had the balls to trade Tesla options, but I was saying up here, look at this. I mean, I said this so long ago, and I hate that I was so right, because it could have been the best trade of my life. I mean, look at this downfall from September 22nd. Tesla's down 31%. And I said, look at this. Look at the supply zone. This is where sellers step up. And what happened? We wake up, sellers step up. I'm like, damn, look at that rising wedge. Look at that rising wedge. It's perfect. We break, we get confirmation. I mean, you could have bought a put for December right there, and it just print. And then it helps that we got that really bad news from Tesla that gapped us down here about they missed on their deliveries. But then they're just really tied into China. That's a lot of these tech companies. That's another thing. China. I haven't even talked about China. China's also they're not in a good spot either. It's like pick your poison. There's 10 reasons you could think of, and then if you try to even harder, you could think of another 3 for why the market should be going down right now. It's just craziness. But this is a stock market. It does not, just because something should go down doesn't mean it will. And we saw that last week. I mean, we had 2 of the greenest days. We had the 2 greenest back-to-back days on the S&P 500 last week, Monday and Tuesday. This was the 2 greenest back-to-back sessions since April of 2020. Just for no reason at all. Literally no reason. So that's why you have to be very, very careful. If you're deep in puts right now, I would urge you to hedge yourself with calls. If you're deep in shorts, hedge yourself with calls. If you're deep in calls, if you're deep long, hedge yourself with puts. That's why options are there. That's how they're supposed to be used. But it's scary times. This crazy week we got here. We're not going to hear from the FOMC until next month, so this is probably the craziest week of this month until we start getting into tech earnings. But you're going to want to hold on, folks. This is going to be a crazy one, and I just had to make a video talking about all this stuff because it's going to be a market mover. VIX is very high. The market is going to do some crazy, crazy stuff. Just keep your head up. If you're on the wrong side of a trade, you got to buy yourself time. If you're dealing with puts, you buy yourself time on the puts. Go far out. Go January. Go February, December, or December, January, February. I'm out of order. I urge you, don't play contracts that are overnight or even a week out. I mean, it's just you're playing with fire. I gotta talk about a trade I had the other day though. This was money. I didn't make a video about it, but look at the Qualcomm. I mean, this was such a freaking phenomenal play. So Qualcomm, we have this just perfect rising wedge. We're getting a big rising wedge on Qualcomm, and then we get news from AMD that they are going to miss their earnings by like $1 billion. So I'm like, oh, look around. What semiconductor hasn't gone down much yet, or is at least going up right now? I looked at Micron. It didn't have a great setup. I find Qualcomm. I'm like, that is a perfect rising wedge. It just broke it. I want to buy a put over the weekend. Actually, no. Yeah, I bought it on Friday, so it was already down pretty good. I mean, we'd already dropped a pretty good amount. We already dropped 5%. But then on Friday, I have that put overnight, and look what happens. Monday, it's just the biggest red dingus I've ever seen. I mean, it just drops. It drops a mile on Monday. So I ended up taking profits on that. It was a nice about 100% gainer. And then, of course, today it kept going. We got another 4%. So that's one of those things where I'm like kicking myself. I wish I didn't sell it, but I'm not gonna not do that. No one got poor from taking 100% profits on contracts. You're never gonna imagine that a day this red is followed up by an even redder day, but sometimes it happens. And now Qualcomm, it's at its yearly low. So I'm looking around and just seeing a lot of things at their yearly low, which makes me think we're going to see a bounce where everyone least expects it. So that's what I'm worried for. That's what I'm looking. I'm actually looking to upside. I'm in puts on the S&P, on a put on the S&P, but I closed my Apple put today at break even. Because I just don't want to be super neck deep in the shorts when it's looking like a lot of things are at their lows and it's looking like we could just see a bounce. I mean, let's take a look. let's take a look at Meta. I mean, look at Meta. Are you kidding me? Meta is below $130 right now. Like what? And look at this. It's running right to the support trend line. You see this? Look at this trend line. Where's it bounce? Boom, bounce, boom, bounce. We're heading there. We're heading there, folks. Watch out. Look at this. It's bounced off this trend line 4 times. It could break through it and just dump, but gotta watch out. Gotta watch out. Microsoft, same thing. Yearly lows. Google is actually holding up pretty decently. Amazon's still holding up pretty nicely, but it looks like it wants to go lower. It actually, wow, yeah, it actually did just break out of that. No, damn. Yeah, that's looking pretty nice to the downside. Um, but just looking around, I see bounces. I could see a bounce happening. Just don't get caught off guard. Look to the upside. You got to play both ways if you want to make money in this market. Otherwise, you're going to get roasted half the time. Anyways, guys, that's all I got for us. Big old 20-minute banger. I'm going to get back with the daily uploads. I got to stay consistent on it, and I'll be back tomorrow because we got PPI coming out, and there's going to be some news to talk about tomorrow. But, yeah, take it easy, folks. Be careful out there. Trade your plan. Use your stop losses. Don't compromise on trades. If a trade is a loser, cut it before it becomes a really, really big loser. And I'll catch you guys later. Peace.